It was just about 2 weeks ago, Mark Yusko, when you were with us on Power Lunch, and you said stocks needed to go down 40 to 50% to reach fair value. You still believe that?
Oh, absolutely. Look, I mean, fair value is not something that changes very readily, and we definitely need to go.
What is fair value? That sounds made up.
Well, fair value is a very simple concept of discounting future streams of cash flows.
Yeah, but what are the inputs? Like, how do you literally say the market has to get cut in half to be at fair value? What are the inputs that comprise fair value?
You take all the stocks and you add up all their future forecast earnings and you discount it back at a discount rate. The problem is the discount rate is changing. No, the discount rate is very clear. It's the 10-year Treasury plus a risk premium.
But it moves.
It's very clear, Josh.
But it moves.
ATE. You're talking about an 8.
Let's let Mark make his point, please.
We have to attack.
Let's let him make
not
his
an attack. It's not an attack. I've never heard anyone make that statement with such conviction that they know exactly what the discount rate ought to be and where it will be and what future streams of cash flow will be. It's like, for me, all of those things are moving targets. So that's why I ask. Not an attack.
Look, I mean, we can debate what fair value is, right? We have a view on fair value, and I can give you a whole bunch of data on that from people like Jeremy Grantham or Cliff Asness or Rob Arnott. They all come with the same fair value. And if you look at things like the cyclically adjusted PE, the 10-year trailing PE, you look at that smooths the effect of high earnings. And now what you're seeing in earnings is earnings are starting to disappoint. 76% of companies disappointed on their forward guidance. And we are closer to a recession than people think. I would disagree with the idea that things are getting better. I think we're going to have two handle on GDP very quickly. And I think it's possible that we could have a recession
so
this
you
year.
Think
all of these things go to this issue of when stocks are overvalued, as they've been for a very long time, really since 2000. We had one small period at the end of the great financial crisis where we got to undervalue just a little bit, but we didn't go cathartic all the way down to a washout scenario. So
that's what I'm asking. So, all right, so I don't know how that's investable because the cyclically adjusted price earnings for the S&P 500 has been above average going back for as long as we have data for, I think, something like 95% of the last 25 years. So if you were waiting for it to get back to fair value, you're saying there was only ever one opportunity to buy stocks and you would have been selling soon after. We never, ever sell. Since 1990, the S&P is up 670%, and that's before you include dividends. Do we agree on that? You've never had an opportunity to buy below fair value.
Josh, what's the compound return on the S&P 500 since 2000? 18 years.
I don't know.
What do you think?
I don't know.
Just give me a number. Make a number.
7.
You tell me.
3.5.
Okay, so
what's your point? There's a technical term for that. That sucks, right? And people think
but you're cherry picking a period of time. What is the significance? You're saying 2000 when it was more expensive than in history.
Just hang on
That's my whole point.
Let me ask you this. So you think we've had peak growth? Peak earnings, and that we've been on an extended sugar high at the very minimum since the Fed got involved in 08, 09. And then once the bowl is now being taken away, we're going to revert back, maybe not to the lowest of those lows, but somewhere not all that far off. 40 to 50% still to go from here is a big, long decline.
Well, we've gone 10 since we were together, so that's 10 of 50. But here's the point. Saying that things are cheap relative to 2000 is like getting pulled over for swerving late at night, and you say to the officer, well, I'm not as drunk as the guy passed out in the back seat. Someone had to drive. No, call
Who's bringing up 2000, though? You are. I wouldn't. I agree with that. I wouldn't bring up 2000.
You said over the last 25 years, okay, stocks have been, the cyclically adjusted PE has been above average. That's true, and that's because the 25-year period that we're talking about is polluted by the craziest overvaluation that we had ever seen.